Good evening everyone, welcome back to my channel. Today I will talk about China Evergrande and how I plan to navigate through this crisis.
Founded in Guangzhou in 1996, Evergrande, one of China's biggest developers, is on the brink of collapse as it wallows in debt of more than $300 billion. The company employs around 200,000 people and generates more than 3.8 million jobs indirectly each year. Many thought that Evergrande, with 1.5 million already sold but not yet completed residential units, was too big to fail. The once mighty Evergrande Group has long been the face of Chinese real estate, surfing a decades-long property boom to expand into more than 280 Chinese cities.
There's been no let-up in markets in Asia as the collapse of Chinese property giant Evergrande unfolds. Shares in the highly indebted company have fallen 80% this year, and analysts fear the crisis could spread throughout China's property sector and the entire economy. It's already being described as a Chinese Lehman Brothers crisis. For the fourth day in a row, Evergrande investors and creditors have been gathering at its headquarters in Shenzhen. Their anger only increased after Evergrande offered property and even parking spaces instead of cash payments.
This Evergrande episode has rocked the global stock market as the whole world feared a repeat of the 2008 Lehman Brothers crisis.
The threat of a default by China's second-largest real estate company, Evergrande, on debt of more than $300 billion has been reeling the Chinese and Hong Kong markets. It's having an impact on Indian stocks too. And last night we saw even the Wall Street react quite sharply. According to Refinitiv data, Monday saw a cumulative $2.2 trillion of value wiped off the market capitalization of world equities from a record high of $97 trillion, which was hit on September 6th. Stocks in Asia continued to be under pressure even on Tuesday amid concerns over China's crackdown on the real estate sector and the debt crisis at Evergrande Group.
It's so serious that there's been talk of a state-led restructuring of the company. Is the government in Beijing going to step in?
This is a big question. I think it's tough to imagine them directly intervening. I think what we're going to see is a big rescue program, debt for equity, that they will exchange the debt for equity, and that the government will behind the scenes encourage the financial institutions to take part. There are very, very many financial institutions taking part in this, hundreds, and a lot of them, the majority of them, are state-owned. So there's going to be a lot of, the government will be able to put pressure there, and it's such a powerful thing in terms of stability and the unsettling effect. I mean, there's hundreds of thousands of people are having homes built, and they put down payments there. So it's a big factor.
Will China's government step in, or will they resist the optics of having to bail out one of these companies? And if Evergrande isn't too big to fail, what happens next? Let's welcome back Marco Papich. He's chief strategist at the Clock Tower Group and author of the new book, Geopolitical Alpha. And DeWardrick McNeil is managing director at Longview Global and a CNBC contributor. It's great to have you both here. Marco, let me just start with you. You know, again, the Evergrande issue has been out there for such a long time that everybody assumed nothing would be done about it. What do you think is now being done?
Well, I think that we should look at the other analogs in China that can provide us with some sense of where the Chinese policymakers are likely to take this. So one of the things that we've heard in China from onshore managers is that investors should really focus on restructuring of businesses such as the H&A Group, which is the beleaguered airline airport business that was recently, whose restructuring plan is now coming to the forefront. First of all, the sort of original founders, private holders of equity, are going to be completely wiped out. But the business itself will be restructured. There will be local provincial SOEs that will take over its airport business. There will be a private company called the Fangda Group that will actually take over its airline business. And that's interesting because that's a business that has nothing to do with airlines. In other words, the Chinese policymakers are splitting off the beleaguered H&A Group and giving it over to SOEs and other firms to ensure that sort of the businesses that rely on servicing the H&A Group are not impacted negatively. So that's likely to be the scenario for Evergrande as well.
I see a total of 3 plausible scenarios. First, Evergrande goes bankrupt. While I think this is possible, it is unlikely to happen due to the impact to the China economy. This is because tens or hundreds of thousands will lose their homes, suppliers and contractors will not get paid, and banks may be impacted if Evergrande defaults payment. This will cause a tsunami effect to the whole China and will affect CCP. Second, Evergrande will be desperate to raise funds, and they will quickly dispose as much assets as possible to raise funds. This is already happening, but it is unlikely to help because they have to give discounts in order to sell their properties. This will add more pressure to the whole China property market. Furthermore, when Evergrande is desperate to dispose their assets, they will get a poor valuation for their assets. Most important, it takes time to raise $305 billion, which is not a small sum. Third is an all-hands-on-deck scenario. Although it is difficult for CCP to intervene openly, it is possible for China state-owned companies to help. Banks can allow deferment of payment from Evergrande. Companies like Country Garden, Alibaba and Tencent can also buy some of Evergrande assets at a reasonable cost. Banks can provide liquidity so that Evergrande can complete their projects. This will stabilize the whole market and will allow Evergrande to continue to operate. However, it is also possible that there will be a full restructuring of the whole company. Wow, should I buy Evergrande since the whole world is fearful? Warren Buffett once said that it is wise for investors to be fearful when others are greedy, and greedy when others are fearful. Personally, I will not buy Evergrande stocks, although it seems like hitting a new low. During this period, I will also avoid all China property stocks, construction and banking stocks. In fact, I have bought more US stocks on the 20th of September during the crash, as I think the Evergrande saga is unlikely to impact US stock market in the long run. While I am still bullish about China, I think it is risky to invest in specific companies at this time. This is because the Evergrande crisis could potentially affect other companies in China. The other reason is because CCP is also trying to regulate many sectors such as technology, education, gaming, gambling, and many others. As such, I will go for a broad-based ETF such as the OCBC Lion Global China Leader ETF. I have shared a video about the OCBC Lion Global China Leader ETF before. I will share the link in the description below. If you were to invest in this ETF, you will not be badly hit even if a few sectors are affected. Let's say if you invest in Evergrande, you would have lost more than 85% of your investment. However, if you have invested in this ETF, you would have lost a maximum of 4.3% even if the whole property and construction sector is affected. Hence, this is a safer approach for now. I hope this sharing will give you better understanding about how Evergrande can impact the global stock market and how to navigate this situation. Do you agree with my views? Please like, share and subscribe to my channels, as I will be sharing more videos about investments and money-saving tips.
Huh.